morning, you're watching Business World Live. I'm Danie Laurel. It's the start of the last trading day of the week. Let's kick off with our top story. The re-imposition of stricter restrictions in Metro Manila and nearby provinces could hinder economic recovery in the first half, according to Bangko Sentral Governor Diokno. He said the move to place the so-called NCR bubble under enhanced community quarantine for 2 weeks until April 11th, and subsequently the modified ECQ from April 12 to 30 could shave off 0.5% from the growth target of 6.5 to 7.5%. Diokno said the global economy is recovering as more vaccines are becoming increasingly accessible, but he noted that a new surge in cases in many countries, including the Philippines, prompted the government to implement stricter measures. Even London-based Capital Economics is painting a bleak forecast for the Philippines due to the lockdowns. It says the Philippines is seen to suffer the most in Asia-Pacific as it continues to fail in controlling virus infections. The think tank said lasting damage is likely to be greatest in the Philippines, noting that failure to suppress infections has required restrictions to remain in place for longer than elsewhere in the region. The Philippines will thus experience the slowest recovery in the region due to rising cases and lackluster fiscal support, according to Capital Economics. Okay, guys, kicking off the market report with a quick health check on our local unit. You can see on my terminal here, our peso trading at 48.385 to the greenback. Now, this comes after it had risen amid our latest Eurobond sale. We had sold or raised an amount of 2.1 billion euros. And this, according to Nikki Mapa of ING, the forex inflows will help support the peso. And now there's less pressure on the domestic bond yields as we get sourcing for the government from abroad. He says that the market continues to be flush with liquidity. Local yields are taking the cue from domestic inflation dynamics as well as the U.S. yields. Now, if you take a look, however, at our year-to-date, you can still see us lagging behind. We are the sixth best performer, if you can call it that. We are down by 0.8% in the first few months of the year. Now, let's take a quick peek at the global equities here very quickly. They have started slipping all across Asia. That happened after broad-based declines over in the United States. You can see the S&P 500 down by 0.9%. That's as the investors have been mulling a proposal for higher taxes on the wealthy to help pay for President Joe Biden's social plan. So the Biden administration is considering raising the tax on capital gains to 39.6% for those earning more than $1 million a year. Some are saying it can go even above 40%. And you can see Asia Pacific also this morning opening in the red there with the Nikkei 225 down by 0.8% this morning. Now, let's take a quick peek at our own open. Finally, a bit of a recovery here. Nevertheless, still hovering at 6,400 levels. We are up a touch, but really barely so. Recall that yesterday we fell to a 4-week low. We were dragged down by the lenders. That's after BPI posted a 22% drop in its first quarter earnings. Financial stocks were the biggest contributors to that decline. You have BDO and Security Bank had lost quite a lot by 2.5%. Now, let's take a quick peek at a couple of stocks. Chelsea Logistics in particular, that is opening in the back foot down by 1.5%. That's as they have announced that their net loss widened to 3.3 billion pesos in 2020. So that's compared to a loss of 832 million earlier. They said that revenues fell by 34% in 2020 to just above 4.68 billion pesos. Now, recall that they will be selling their entire stake into Go, and those losses widened as well to 1.84 billion pesos in 2020 compared to 890 million peso loss in 2019 on the back of revenues down by 19%. Now, to talk to us about how to tread the markets as we close this topsy-turvy week, we have with us Manny Ocampo, is Managing Director for the Equity Capital Markets over at ICCP. Good morning, Manny, and welcome to the broadcast.
Good morning, Danny.
Manny, let's kick off with the financial sector, shall we? This was the one that was hardest hit yesterday. It's something that everyone is saying will recover, but the whole question is when. We're already at the lowest levels of interest rates that we've seen. Inflation seems to be at least kept at bay according to the central bank, but yet the loan growth has been staggered. Tell us more about your outlook here.
Well, banks really have to take that move, shall we say, to start lending again. Lending to the government, putting money into government securities and all that really does only gets them subpar returns at the end of the day. So now, understanding, however, that the banks have taken a more conservative stance at things on lending. Consumer loans, which used to be a big contributor to fat margins, shall we say, that has the banks have taken a bit of caution on that particular side, no, because people have either lost jobs or maybe have lost income generating capabilities, etc. So the banks are taking it carefully on lending to what used to be a source of good margins for them. Um
Sir, are
what
you
else?
seeing them, however, improving when it comes to the big heavyweights, the corporate loans, at least? Have this in any way been buoyed, even if the consumer or retail sector is lower?
Yeah, well, sorry, all the corporates, all your major corporates, Ayala, San Miguel, etc. They go to the bond markets, and that is while that banks can
Mhm.
traditionally still buy bonds and all that. The intermediate, yeah, the spreads are a lot narrower compared to a straight commercial loan, for example.
Okay.
So people are holding back on that one. Banks are holding back on that one. One thing also, Danny, is that the IRRs for FIST, while
Mm.
FIST is out already, the IRRs are still forthcoming, or maybe I don't know. The initial reaction seems to be neutral about FIST. It's not going to encourage. Some bankers I've spoken with
Correct.
say it's not. It's not. Yeah, it's nice to have, but it's not going to prompt us to start opening the lending floodgates again. Something like that.
Sir, but can you say that in terms of provisions that have been set aside in 2020, okay na yan to buffer the rest of the losses for 2021, or will they be needing to set aside even more for 2021?
I think they go down the lines as far as credit, the exposures are concerned for 2021 and beyond. The big hits that they expect, that they've taken provisions already for that. Now they start refining that. Will I start losing on? Will I need to provide further for consumer loans? Will I still need to provide further for credit card loans that I've granted? My consumer banking group has granted, stuff like that. So more refinements, not the big numbers we saw last year, for example.
Okay, sir, can you comment on the BPI first quarter earnings? Of course, they're the big blue chip that has
Sure.
reported 22% drop. Of course, expected that the first quarter, if you just check last year's performance, that was pre-pandemic. But to what extent is this better than expected, or could have been worse? And to what extent were they able to already keep the policy at bay to be able to not have this losses sustained going forward?
Yes, bulk of it seems to be one-offs, again, from what we've initially seen. We'll wait for the briefing coming up from BPI. The thing that we saw also in the initial numbers that they presented was that there seems to be some kind of pickup again on loan growth that starts picking up as far as maybe improved margins and all. Maybe by the second or third quarter, that's where you see the kick from maybe increased loan activity again. No?
Sir, is this a preview of how the other banks will be performing as well, or is
Sorry,
there a discrepancy of between the big banks and the smaller banks?
not necessarily. BPI was, shall we say, bit the bullet early on. Metrobank, BDO were maybe a quarter or so late. So, we'll see how that turns out for them.
Sir, comment on the city retail business exiting the Philippines. The BSP is now closely monitoring that, but also
Right.
BPI expressing interest in that. Is that an interesting buy right now? As you mentioned, that the loans are soaring in the consumer space, and they've just reported losses. No, not losses, sorry, lower net income year on year.
Right. On the consumer loan, I think BPI is looking also at the deposit side of the Citibank consumer loans or consumer banking group, shall we say? No, they're looking at the liability side of that one. The asset side, I'm not sure. Maybe better quality assets, definitely bigger volume. So they're maybe buying bigger stock. Clientele of Citibank's retail banking, maybe the group that BPI or even BDO Consumer Bank may be looking at. So I wouldn't think I'd like to think that BDO will probably look at it very closely as well at some point. Now, that exit from the consumer bank, I understand, will be taking a bit of time. I'm kind of ex-city myself. From what colleagues tell me, that'll still take maybe a year or so.
Okay, sir, and finally on monetary policy, Governor
Right.
Diokno says that the restrictions, of course, have brought down our GDP. He's even having a lower projection than the economic managers. But he does mention that inflationary pressure is transitory. It's at bay. Banks, however, are still not lending despite the lower interest rates. What's the next step of the central bank now? What more can they do to help the banking sector, and what catalyst is needed for monetary policy to spur loan growth this year?
Well, reserves are still something that the BSP has programmed to lower over time. That's still forthcoming, and that hopefully will shall we say, start having the banks look at lending to improve margins at their end rather than placing it in government securities, which is really a no-brainer type of exercise for them. Okay, the governor, I think, will take the cue from inflation and movements of interest rates in the U.S. He'll probably mimic Fed action as well. If there's any big change in that one, they will probably take a close look. If the U.S. Fed increases or decreases, they'll take a look at their corresponding movements over here. But inflation will be your biggest, maybe,
Determinant.
determinant or impetus rather for any interest rate movements up or down. Yeah.
Okay. And sir, finally, very quick comment on Mondanis and IPO. Are you excited for this? Is this the time to be doing an IPO? $1.3 billion. Is that going to have enough demand in terms of liquidity?
Well, it will really depend on how the foreign underwriters move the books. With that kind of size, if a good portion of the offering is not placed abroad, looking at purely the local side, that may be challenged. Local markets are maybe good to take up 15, maybe 18 or 18, 20 billion at the maximum at this point in time. So a 60 billion peso IPO, if two-thirds is not taken up by the foreign underwriters, that's going to be, that'll that will hit the liquidity at the local side. Uh, we've well,
Sir, what about the use of proceeds? In
uh,
terms of use of proceeds,
well,
are you happy with that split?
not really. I would have wanted to see a bigger portion of it, maybe going to expanding the facilities or doing acquisitions for Mondenisin rather than taking out one of the private equity funds. You know.
Okay, very interesting comments there. Of course, a lot to watch out for as that comes into play and
Yes.
whether the foreign
Sorry.
investors will be
Yeah.
picking that up.
Sorry,
Yes, sir.
Danny.
Go
But we
ahead.
like the company. We like the company.
Very good, sir. And of course,
Yeah.
exciting times nevertheless to have some activity and public listings in the local bourse. So thank you so
Right.
much, Manny Ocampo of ICCP.
Thank you.
Here are the other headlines we're keeping our eyes on. President Rodrigo Duterte has officially appointed Karl Chua as Socio-Economic Planning Secretary and the NEDA Director General. This comes after Chua held the positions in an acting capacity for an entire year. Palace spokesman Harry Roque said Duterte approved Chua's appointment on Thursday. Roque adds that Chua has served the administration with professionalism, competence, and integrity as acting secretary and as former finance undersecretary. With this, Malacanang is confident that Chua will consistently perform well in his crucial task of jump-starting economic recovery. Recall that Karl Chua was named acting NEDA chief on April 17, 2020, following the resignation of Ernesto Pernia. Now, the Energy Department is not expecting to issue any red alerts on the Luzon grid for the entire summer season. However, the department warns that yellow alerts are still possible until July. The yellow alert is raised when power reserves fall below the ideal levels, but this does not necessarily mean that household outages may occur. The DOE explained that yellow alerts could be issued due to extended outages at several plants. Meanwhile, red alerts are raised when there is no more backup power that may result in possible rotational outages when a major power plant shuts down. That's a first look into the business day. Today is Friday, April 23rd, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.